All right, guys, we are here today. It's early. We're up. So yeah, today we have US housing starts and building permits. It's not the biggest release, but tomorrow we have the FOMC meeting, which is a pretty big release. Uh, and so we'll see if we get anything good. We also have Canadian CPI today. Market was pretty flat yesterday. As I told you all, it would probably be. Um, we just didn't really have much going on. Uh, and the whole market's kind of apprehensive ahead of the CPI report. So that's basically what we got. Let me wake up a little bit, drink my coffee. Yeah, so Apple, good day yesterday. Nvidia, good day yesterday. The SPY, again, pretty flat day. I mean, it was slightly green, but it was pretty neutral. This morning in pre-market is actually all the way back up to 444s. So that looks good. The Q is up there as well. You can kind of see the Q at 371. So we're watching that also. I don't know if we're bullish today. I genuinely have no idea. Let me get some music playing. Yeah, the Fed tomorrow, Jerome Powell. But Nvidia green day, rest of the market pretty green day. We're gonna do a poll here like we always do. But Nvidia green day. If the Fed raise rates tomorrow is gonna be our poll. Vote on that poll. Let me know what you guys think. How about those Saints, guys? How about those Saints? You'd love to see it. We're slightly green this morning. It's really kind of a break-even day for me, though. Trying to see where I got in Honeywell. All right, so look at the Q up there, Apple up there, Tesla. Tesla with a red day yesterday, back up to 267 though. Still a very green couple days here. Yeah, I saw that. Trade of 8, top step. Yeah, I saw that. Yeah, so we got Canadian CPI. We also had European CPI, Eurozone CPI drop this morning as well. It came in at 5.2% versus 5.3% expectations. And so what's up, Jonathan, Sim, Bao, Bob, Ponzi, Stefan, Alyssa, DJ. All right. What's surprising is that 44% of the votes say the Fed is going to raise rates tomorrow, which is just highly improbable. It's like 1% chance the Fed raises rates. And listen, maybe y'all are right. I just don't think that's going to happen. What's up, Danny? Yeah, I just don't think that's going to happen. I don't think the Fed raises tomorrow. I just don't think the Fed raises tomorrow. Again, maybe they do. I don't know. I just think it's so unlikely. But yeah, European CPI came in at 5.2% versus 5.3% expected. Lower than expected, universally. Regular CPI came in under expectations, and then base CPI came in as expected, or core CPI came in as expected. So yeah, if they surprise rate hike, the market's gonna drop most likely, but that's not very likely as well, to be honest. So yeah, if they do a surprise rate hike, the market's gonna drop almost certainly. Now, again, that's very improbable though. It's just probably not gonna happen. We got AutoZone earnings this morning. I didn't realize AZO earnings. Is this a holiday song? I can't tell. It's on the generic music. Seems holiday-ish, right? Let me know what you guys think. Do y'all think this is a holiday song? Let me know. All right, so tomorrow we got General Mills. Am I in General Mills anymore? I don't think so. I think I sold it. Yeah, I'm out of General Mills. I'm ready for earnings season to come back. We got FedEx. FedEx drops their earnings Wednesday evening. Not worth it for me to cover. We're not going to cover it, but still, FedEx is Wednesday evening. Nothing else really dropping this evening. I'm ready for earnings season to come back here, man. Again, it's just really slow. I'm looking at next week. Nothing. Costco next Tuesday. Not a small company, of course, but not really the largest company either. MU drops next Wednesday. We'll probably stream that one, I think. It depends, but we might stream MU earnings just because of AI and stuff. Rite Aid, CarMax next week. Nike, BB next Thursday. That's the biggest one. Again, I'd cover them if they were in the morning, but because they're the evening ones, it's just not worth it. Carnival Cruise. Yeah, so I'm looking at the week of October 2nd. Pawn talked about something here. Let me see. So CCG IPO. Let's see. Yeah, so CCG IPO'd yesterday, went absolutely nuts. CCG. Yeah, I just think it's unlikely, man. Again, we're not the ECB. You know what I mean? So I just think that Jerome Powell wants to keep his job and he doesn't want a market crash under his watch, right? And so what that means is that he's very unlikely to raise rates. Again, I've covered every major rate hike decision. I'll put it this way: I cover every major rate hike decision, and I have for years, and I've never seen him raise rates, never. You know, and so I doubt he's going to start now, but it's possible. I mean, just because it's never happened doesn't mean it won't ever happen. It's possible. It's just be smart. Yeah, I think he'll pulse almost certainly. But they're obsessed with the hike in November. Yeah, for sure. I mean, listen, I think what will probably happen, and again, I've said this a bunch, so I'll say it again. I think what will probably happen is we'll pause or skip tomorrow, and then in November we're going to raise rates 25 basis points, and then that's going to be it for the year. He'll let things settle after that, and so I think we'll have one more rate hike, unless again, what matters more is what he says tomorrow. You know, this is what I've always told people. And again, a lot of people think the decision matters the most, and that's wrong. Because again, the decision is relatively insignificant for the main reason of it's usually coming in as expected. So we already know what the rate hike is going to be generally with the US rate hike decision. Like, we already know what the rate hike is going to be. And so it's not really going to be a shock tomorrow when he announces a pause or a skip and a 0 basis point rate hike tomorrow. It's not going to be a shock. What can and will influence the market is his sentiment, his tone, whether he's hawkish, dovish, whether he's pushing for more rate hikes than expected, whether he thinks inflation is under control, what he thinks is going to happen next year in terms of a recession or inflation problems. That is what's going to matter more than anything else. And in that regard, traders are going to hang on every word he says. And we're going to stream the whole thing live like we always do. So if you have not already subscribed, because again, we stream all of this live like we always do. Yeah, looks like most people agree with me. And again, that's probably what's going to happen. That's why when I see people voting yes, I think some people are just voting bearish no matter what. Like, even if it's outside of expectations, even if it's highly unlikely, they're just voting bearish because they're desperate for that sentiment to remain. But again, you got to understand, man, like in the crazy bull markets we've had over the last century and the crazy bear markets, universally we've had skeptics of the market, right? And again, they're not always right. Especially if you get a lot of people bearish, it usually means that they're wrong. But we'll see. We'll see. I'm hoping on rates staying there for at least half a year after the November hike. Yeah, and I think we've been pretty aggressive in the rate hikes over the last few years, and so I think that's possible. That's plausible, I would say. But who knows, man? And again, it depends on what inflation does. All right, team. Yeah, I mean, I think what we're seeing right now is I think what we're seeing right now is choppiness leading into the rate hike decision. I think everybody kind of overwhelmingly expects a pause or a skip, but yeah. If pause, I'll be very surprised. I hope I am wrong. Yeah. Yeah. I mean, I think you're going to be very surprised. I think they're going to pause tomorrow. Um, and I think, as somebody else suggested, the rate hikes overseas were not as polarized as ours, right? So, like, ours, if we look at the CME watch tool now, the day before the rate hike decision, which is usually when it's the most accurate, we're at 99% of people thinking we're going to pause or skip, and 1% of people think we're going to raise rates. And so it's just very, very unlikely that we're going to not pause or skip tomorrow. And maybe you're right. I don't know. I just think it's very improbable that we don't pause or skip. It's highly unlikely we're going to raise rates tomorrow. But again, anything could happen. It's not like, again, if it was always like one given thing, there would be no shock. Like, they would just kind of update people along the way instead of causing one big announcement. So again, it's possible they go outside of expectations. It's just unlikely. And so we'll see. They're trying to hit the sweet spot of effective 0% rates without killing inflation. 5% rates, 5% inflation after the next inflation peak. Ride that wave half a year and make money. Yeah. The Fed usually moves in unison. I'm assuming you mean in unison with the ECB. But again, the ECB was expecting it was polarized. It wasn't as polarized. I mean, it was mixed. All right, so a judge declined the SEC's request to inspect Binance US. All right, so a U.S. judge has declined the SEC's request to inspect Binance US. During a court hearing on Monday, September 18th, the agency was neither asked to back down its request for additional documents. I guess that's positive. Where's Bitcoin at? Also, do me a favor, bump those like numbers up. We got 30 likes. We could do better than that. Let's try to break 100 if we can. So yeah, judge declines the SEC's. That's good, man. Hopefully that keeps happening. So I got my first couple of submissions in BJJ yesterday. Feels good, man. They were both guillotines. And I know I'm not going to be able to get higher level people with guillotines because, the thing about white belts is that they kind of blindly rush in and try to take me down, and they leave their head and neck exposed. And so I can just kind of jump on the guillotines. But I landed 2 of them yesterday when rolling, and so it feels good, man. It feels good. We'll see if we keep getting better. But When was the last time you remember not matching the Fed's expectation? I feel like I've seen it hit right several times now. Oh yeah, it's almost every time. It's very unlikely that they go against expectations, especially in the U.S. because the U.S. has so much money and reactions, and so it's just unlikely that we're going to go against the Fed's expectations. I mean, it's possible, but it's just unlikely. All right. So Polaris, Bitcoin broke 27 again, and BNB might pump on this Binance news. Yeah, let me see. Let me try to look this up. I'll have to look back, but I'm not sure when the last time they went against expectations. I know it's not common. Again, I cover all of these, right? So these happen every 6 weeks. So these happen roughly, if my math is right, roughly 8 times a year. You know. So yeah, this happens roughly 8.5 times a year, right? And I've covered every one over the last year. And so again, I can't remember the last time they went against expectations, which I don't think it might not have been any of them this year, but I might be wrong there. I'll have to look it up. And again, what's going to matter most? By the way, the guillotine is a nasty move. I wrestled in high school, and it was a move that got me a gold medal in an all-day tournament. So, in wrestling, do they allow submissions? Because I'm not sure. I never wrestled, you know. I did some judo as a kid, but that's it, and that was a long time ago. And again, I've been training jiu-jitsu for, months now. And like I've gotten submissions on like brand new people. Like the other day, we had like a brand new kid walk in, and he had never done anything before, and it was different because it's like I've watched MMA for years, and so I know like mount is dominant, back mount is very dominant, side control is dominant, and then you go down to half guard, and then you go down to full guard, and then you got to go down to open guard or whatever you want, right? Like I understand the ranking of the different positions, and I understand the submissions to a certain extent. I had never actually done them, but like I knew what they were. They had a kid come into the gym who had just never done anything. He had no idea anything about grappling whatsoever. And then they paired me up with him. And so within like 10 seconds, I got him in an arm triangle and like tapped him out. And then after that, once I realized he had no understanding, I basically just kind of sat there trying to teach him the different stuff instead of just kind of punishing him for 5 minutes. But anyways, point is, yesterday I got my first real submissions on actual like people that were training longer than I have, and that was a good feeling. But yeah, they were both guillotines, and I know I'm not going to get them. I know I'm not going to be able to hit those on super experienced people, because super experienced people are not going to run in with their neck out, and so like if somebody tries to grab my leg, it's instinctual to do so. But again, I doubt I'll be able to hit them moving forward. I just can't see them going against the ECB. Yeah, I mean, I'll have to look up the stats on that, Alan. But yeah. Oh no, I like no gi much more. I like no gi much more than gi. Gis are hot, bro, and there's so many grips. Like yesterday, like again, you can kind of see my neck here. It's because I got cross collar choked in gi, right? And because gis, they can grab your collar and they can pull it, and it sucks. And it's hot, and it's just like I know gi is the original, but I like no gi much more. So we do a little bit of both. And yeah, European CPI coming in a little bit low, but mostly as expected. We also have building permits and housing starts today. So that's interesting as well to see what those show up as. Why would the ECB rise and not the US? Not in the US not rise? It makes no sense to me. I'm bullish. Well, because the US and the ECB are different markets, brother. They got different inflation problems, different economies, different markets. They might mirror each other to a certain degree, but it's different markets. For the same reason, you know, if ECB raises, the Fed doesn't always raise, right? Like sometimes they will play off of each other. Let me look this up. Okay, so yeah, so looking back here. Okay, so this was an article done in May regarding the Fed and the ECB going their own ways with interest rates for now. And I'm quoting this article, and again, it's talking about so they both raised rates in this period in May, but that's where the similarities ended. It says, quote, both the Federal Reserve and the European Central Bank, the ECB, met this week to set policy interest rates, each hiking their targets by 25 basis points. That's where the similarities end. The Fed signaled it probably won't hike rates again this cycle, while the ECB sent a message that more hikes are all but certain. Okay, so understand, and this is this year, right? So understand, back in May, they put out expectations for these different, for the U.S. Fed and the ECB. And the U.S. Fed said it was much more dovish, which means like much less rate hikes. You know, dovish means a less aggressive rate hike policy, basically, where, you know, the ECB was much more hawkish, right? Which meant that the ECB was much more committed to raising rates for the rest of this year, versus the US, which was very dovish and signaled that they probably won't raise rates again in this cycle. And so again, that's the difference here, right? So that's why you see it's not a super big shock where, a rate hike or two later, a cycle or two later, the ECB decided that they're going to raise rates 25 basis points, while the U.S. is still very unlikely to raise rates. Like the probabilities of a U.S. hike this cycle are very low, again at 1% or less. So they're not always the same, and their monetary policy, their plans, their future projections, their future paths are not always the same. The ECB and the U.S. they're similar and they can mirror each other sometimes, but it's not always the same. No, a guillotine is when a guillotine is a headlock, and so if somebody rushes in, you grab them by their head right here, and you pull back, and you wrap your legs around their body so that they can't like shove you off of them, and you pull back on them like this. You get your forearm under their neck, and you kind of pull up. Is what you do, But yeah, those were the first two I ever hit. But I hit two back to back on different opponents yesterday, which felt good. That's the only submission I've ever hit. That and an arm triangle. I've never hit anything else. I've gotten really close to like rear naked choking people. So I've gotten people in like body triangles because I remember because I'm pretty flexible, dude. For my size. So I've gotten people in like body triangles. I just didn't have the proper form to submit. I'm pretty new, right? So I'm still a very new white belt who's just learning. But yeah. Because ECB CPI is higher than our CPI, their CPI is higher than their CPI. Yeah, so again, the ECB Eurozone CPI came in today at 5.2%, right? 5.2%. Now that compared with our CPI last time was, let's see what we showed last time. I can't remember it. I know it was lower than this. The next CPI release is October 12th. It looks like 3.7% is where ours were. And so again, if you look at Europe, their inflation is much higher than ours, right? They came in at 5.2. We came in at 3.7. So we're like 25% or more better in terms of CPI and inflation data versus the ECB. So again, ours is much better than theirs right now. So it makes logical sense why the ECB and Europe in general would choose to raise rates, and we might still skip or pause, is because their CPI inflation data as well as other data from them are much more elevated than ours. Now, I'm not saying ours is good. 3.7% is not great, but it's better than 5.2, 5.3. So it looks like ours is about 40%, a little bit under 40% better. Yeah, man, CCG, I would have covered it today, and I can cover it, but look at CCG. It's a stock that went absolutely crazy. This thing went up to $200 yesterday. Went from 1140s, where it opened the day. Is this an IPO? Yeah, so this one started the day. This is the entire day of CCG, which is crazy. Look at this. This thing started out at $11.47, and it started the day there, and it ended up pushing all the way up to $200, back down to 70, 60, 50. And now it's sitting in pre-market at 65. Just be careful. I mean, this thing could make parabolic runs today, of course. It looks very similar to some of the other crazy squeezes that we've had, but the risk is so elevated here, so just be careful. Yeah, because TTOO is a 40-cent penny stock that looks terrible. I mean, it's not that I'm choosing not to answer your question, but generally, y'all don't want me to answer the question because TTOO, if you put up a long-term chart, it looks like dog poop. If you put up a yearly chart, it looks like dog poop. And so no matter what time frame you look at, this looks bad. Again, maybe it's going to go up. I mean, listen, to give you a bullish argument, it has gone from 5 cents to 45 cents back since June, but but again, when you zoom out more, it's gone from $6 down to 5 cents, back up to 45 cents. And so, yeah, it might be up 900% since June, but it's down. But that's because it was down from $6 down to down to 45 cents. So yeah, I just don't like it at all. I think it's incredibly risky penny stock that has a terrible long-term chart. And again, maybe the last couple months is gonna save this thing. I don't know. I hope you make money on it, brother. Good luck. Again, I'm not trying to hate on it. I don't trust it. All right, guys. So, are y'all gonna buy? What was that? CCG, man. Again, I'm scared of this one. I really am. Tesla is interesting. Nvidia had a slight green day and it's back up over 440s. So yesterday it dipped all the way down to 420s at the open, which is kind of scary. Again, Nvidia is what's weighing on the market. So like if Nvidia, because again, you got to think about why the market is really up. You got to think about why the market is really up over the last year. And one of the main reasons is because tech and Nvidia AI rising. So with that, if Nvidia and tech and AI give back the gains that they made, the market could dip back down. And so that's something you want to understand is very possible. It could certainly happen, and it's really what you want to watch for. Hey, good luck, Giovanni. Yeah, I made another green day on my funded account, man. We're kind of slow and steadying it. Again, I'm not shooting for crazy big gains, bro. Again, I'm just not shooting for crazy big gains, dude. Again, I'm going for slow and steady. So like in my Express funded account, we have had 1, 2, 3, 4, 5, 6 green days in a row. We're running at 86% accuracy, 86% accuracy. And again, we're not shooting for big gains. We've had 2 winning days now, 2 winning days over 200, but we've had 6 winning days in a row. And we're kind of slow and steady. Like this week, we've made about $500 in this account, and that's okay. It's small. I don't need super large gains. I don't. Again, what I've always told people, once you're funded, you just take it slow. You take it slow. You build up those cushions. You get your 5 winning days. You get out of the scaling plan, and then you can start to take some risks, is what it is. That's what I'm doing, at least. And so again, right now, our winning trade accuracy, we're running at about 79%. 79%. Our average losing trade is a little bit larger than our average winning trade, but that's all right. I don't need a crazy big, crazy good risk to reward system because it's mostly scalping, right? But because you can see my accuracy rate is about 79% here in this is my Express funded account. So this is in my funded account. That's my accuracy rate so far. So yeah, we're just grinding it here. CCG will have a run again when the pumpers grab a bone, and they would not let go so easy. They're retail traders, brother. They're gonna get out, dude. Forward puts. All right, good luck. I think I'm in Ford. Yeah, I'm in Ford. I'm green in Ford. My average price is 1170s. I bought it a couple days ago. It's all the way back up to 1230s. Small little green trade, but green nonetheless. Again, I'm telling people, man, y'all can bet against these stocks, like these big stocks, but I think it takes different types of people to bet against different stocks. But just understand, like the real edge is on the long side. long term, especially with blue chips, right? Like in blue chips, like listen, if you want to short penny stocks, bro, there's some good penny stocks to short. Again, I'm not necessarily messing with them, but like if I had to short something, I would probably short like mid caps and penny stocks, because like how many times do you see a mid cap stock that's just wildly overinflated in terms of price? That's just up so much over the last year, and it's brand new as a company. It's only been out for a few years, and yet it's up to $300 a share. How many times do you see that? I see those stocks give so much gains back to the market. Those stocks could drop 70% a year. Penny stocks as well. So if I had to short or play put options, it wouldn't be on blue chip companies. I think that's a sucker's bet. Like even if you're right, the edge is very low and it's very risky. You know, compare that to something like mid caps, which just have huge, drop potential. Those are what I would do myself. Yeah, but mid caps aren't, Bob. You can short some mid caps. I'm not even going to name some of these names because the only one I will name is Peloton. PTON, a great example. BYND, another great example. You look at these long term. TLLY, like a lot of these are, pretty bad companies. Mid caps and small caps don't really move with the Fed rate cuts, KC. So like they're not stocks that move with the market at all. Like mid caps and penny stocks are usually kind of, again, they usually have really, for lack of a better word, scammy markets, where like a bunch of retail traders who are down big are all telling everybody how great of a company they are. But they don't have any correlation really with the broad markets. Not that I can see. Maybe you're right, but I think most of the time they don't have anything to do with the big broad markets. It's not like the Fed choosing to raise rates is going to make penny stocks go up. They're just completely independent to the markets in general. Yeah, Tilray, man, cannabis stock down pretty big, down to 250s. Looks weak. Up a little bit though over the last couple of days. Again, the problem is like they're never going to legalize. Is what you realize. Like both sides don't really want legalization. They're getting too much donations. Yeah, MVIS, Patrick. I've seen this one. I remember this one, man. I remember when this one got hyped up during AMC and the likes, and it's the same thing, man. It's the same freaking thing, guys. Like it's the same thing. Which is what I mean by that is it's a mid cap stock, mid to small cap stock that got way overhyped, that a lot of people bought in when it was really high. At like I remember this one when I was at like 20, 30, 40s, 50s. Everybody was talking about how great of a company it was, patting each other on the back, telling each other they were going to get rich, telling each other to buy it. And over time, it's gone, from a post-split price of $5.40s down to $2. And so, again, another overhyped mid-cap stock that basically just gave its gains back. Now Barcode's at $2 a share. And, yeah, I mean, again, I think a lot of people are talking about how this is good because they're stuck in much higher prices, right? So it's confirmation bias. Like they want it to go up. Right, so they overestimate the likelihood that it will. Yeah, I'm not sure if you're just trying to troll, but I mean, Disney's at $85 a share. It's got a market cap of, let's look at the market cap at Disney. Disney has a market cap of 155 billion. So, yeah, not really a penny stock, sir. But, and again, we're pretty green on Disney. If you look at our Disney trade here, I mean, it's a small trade, but we've already capitalized on it already. Like you can see, we're holding 20 shares left. Our average price is 81s. So we bought the dip, added to it on the drop down under 80, and then got a really nice entry, and now we're up. And this is the last 25% of the position. So very green on Disney too. Yeah, AMD and other microchips are starting to run. Right, for sure, Nancy. I agree. Thoughts on the E-mini today? I'm not sure. I'm not really a huge Disney lover either. It's bad. It's not like, I just think, like, again, I don't really get emotional about specific stocks. Like, I don't really care either way, about any of these companies. I don't morally trade. I don't let political stuff influence my trades, which I think that's a lot of people's mistake. Is like they look at these companies and they're so like sensationalized and they just hate these different companies, right? And it makes them overestimate weakness, is what it does. Again, I don't know how many people made fun of me when I bought Target on the dip, right? And made a bunch of money from it. Now I'm mostly out of it. Same thing with Disney. Disney has been probably the swing trade / investment that I've made the most money on over the last few years. And every time I buy it, you got a bunch of people saying, "Oh, Disney," And again, maybe it drops. I don't know. I really don't know. What I will say is that it hasn't yet. And again, a year ago, people were saying, yeah, Disney's going to hit $50 in the next 3 months. And then, even if it hasn't gone up much, I still think there's objective value where it's at. Yeah, Nike earnings this week. So I think Nike earnings are this week. It might be next week. Let me see. Nike earnings are sometime soon. I'm not sure when they're going to be, but they're sometime soon. It might be, it's either this Thursday or next Thursday, I think. Let me look. So Wednesday, General Mills, FedEx. So Wednesday's General Mills and FedEx. Thursday is, no. All right, so it looks like it's next Thursday. No. It's either next Wednesday or Thursday. Yeah, so it's next Thursday. So next Thursday we have Nike, BlackBerry, a bunch of other ones. But yeah, so Nike earnings next week. SPY back over the VWAP here. Look at the SPY. The SPY's pushing back. It's at 444.30s. Yeah, we got housing starts, building permits today. Roblox is all right. It's just, again, we're in call options of Roblox, but it's a cheap call option. It's October. It expires in like over a month from now. And it's a $30 call option. So we just want Roblox to break over 30. We'll see if it does. Yeah, NVIDIA fighting back up. AMD back up as well. You can see AMD on the right. Here's NVIDIA here too. So they're starting to run. Again, the whole market's weighing in on NVIDIA and other microchip stocks. It's just so heavily watched right now. Are Roblox earnings tomorrow? I don't know. No, next Roblox earnings are in November. Yeah, I mean, again, we're already out of target. We got 10 shares left. So, I mean, we're down $25 on the last little piece. But again, we took most of the profit off. And we might add back down here, to be honest. We took most of our profit off. Again, we bought it around like the 120s and sold around 127s, 126s. And now we're holding 10 shares left of target, just to put it in perspective. I'll show you the trade too. You can see we are down $10 or I'm sorry, $25 on the last 10 shares, but we've already scaled out of most of this, and we got out most of it last week, like last week or the week before. But if it keeps dipping, I probably will buy it again, just because I think the PE ratio is not bad. Let me look at what the PE ratio is. Yeah, the PE ratio for Target is 16. Pretty low. And again, there's still a lot of people that go to Target, in all honesty. So I might actually add a little bit down here. All right, yeah, we just added some more. Not gonna add any more than that, but we got a nice little average here. What's the Unity situation? CH. Yeah, I don't know enough about ChargePoint. It looks like a mid cap that lost a lot of value to me, which is again the same thing that I always tell people, which is like mid caps can go down big percentages, and the difference is like people bet on mid caps, and I say this all the time, but they bet on mid caps like they're freaking investments, like they're Apple, like they're Walmart, and they're just not. They're not Walmart. They're not Amazon. They're not Apple. A lot of these are very new companies that are really speculative. But retail investors and traders, they buy them like they're Apple and they sit on it. And they think they're doing good. They think they're investing in growth companies or whatever it is. But a lot of the time they're losing, in this case, 90% of value over the last year, investing in companies like ChargePoint. And so again, when I invest, it's not in companies like this. It's not in, all the companies I invest in, I have to know. I have to actually know the company. So when you see me invest, I'm only investing in companies I know. Like Exxon, Walmart, Tyson Foods, Target, PayPal. I made a bunch of money on my PayPal trade. Oracle, we're up on Oracle, Microsoft, Coca-Cola, Honeywell. Honeywell we did great on too. We just had to be patient. Google, we're still up nicely in Google. Ford, we're green on Ford. Disney, we're green on Disney. We're down a little bit on Etsy though, but it's all right. We're not going to be green on everything. We bought AXP, American Express, a couple days ago. But the point is, like, and we've been in Apple, so like my investments in swing trades are always companies that I know and understand. I'm not going to put money in a really new startup company. It's just risky. Changing their price structure caused minus 8% yesterday. Wait, there's a new timeout function? What is it? Oh, wait, you could time somebody out for 10 seconds? That's better. I mean, I don't find any use for that, really. I don't think there's much of a use for that. Oh, no, not a 10-second timeout. Like, that's not going to do anything. 5 minutes is like 5 minutes. Like, you get put in a 5-minute timeout, you're like, eesh, and I don't know what to do. You got to wait there for 5 minutes. 10 seconds, they're just going to be like, okay, fine, do it to me, All right, team. How about those Saints? Guys, I'm not going to say the Saints are the greatest team ever this year, but they're looking okay. I don't know how I feel about Carr. I say throw Taysom Hill out there. Throw Taysom out there, man. As long as we got rid of what's his name, bro. I kept telling people that was it Jameson? I kept telling people Jameis Winston, which is not that good, bro. I've been telling them this for a while. That Winston's just not that great. Like everybody, like every time you hear people talk about Winston, right? They're like, "Oh, he's so good. He's so good." When has he performed well in the NFL? Ever? Has he ever performed well in the NFL? He's 30, basically. When has he actually done well in the pros? I don't care about college. I'm talking about the pros. He's not very mobile. He doesn't run very well. His throwing accuracy is dog poop. And so just, get him out of there. I don't know why we ever tried him. Yes, Philip. Who dat? I'm from Baton Rouge. So Baker Mayfield, get him out of here too, bro. Ricky. Unity is essentially going from a free service to freemium for a quick money grab. Yeah. All right, anything else coming out today, guys? Again, we got less than an hour before this CPI and building permit housing start data drops. People are clowning on, yeah. All right, guys. Yeah. So I'm looking at this guy, car dealership guy, and he says, quote, nearly 50% of all car buyers will not purchase a vehicle that lacks Apple CarPlay or Android Auto. If I'm a car company, that's what's keeping me up at night. I mean, I don't really care about any of that stuff, dude. My wife uses it, but... yeah, I mean, this is what I'm telling people about investing, bro. And again, people don't listen, right? Who is this guy? Right, so this guy, Brian Feroldi, this is what I truly believe in the market, and this is what a lot of people miss out on. This is why, like, it's kind of crazy when you see people say instead of long-term investing, they're deciding to, like, short, like, Apple. Like, look, fine, like, short Apple. But, like, the reality of it is, if everyone put 15% of their salary into index funds, lived on the remaining 85%, and avoided all non-mortgage debt, the number of millionaires would 10x. And I agree with this, right? It would take 10 years to become a millionaire with 100K. 10 years to become a millionaire with 100K, basically, give or take. Or maybe that's wrong. Maybe that's wrong. I think in 10 years, it would take 20 years. It would take, let me look at the compounding. I think the numbers actually, like, if you take 100K and you wait 10 years with like 8% gains, you're going to earn, I think it's like 450 or something like that, if my math is right. Let me look at a compounding calculator. All right, my number might actually be wrong. Let me see. All right, so you take 100K and you wait 10 years and say you earn 10% a year. And you compound annually. Or let's do monthly compounding. Well, I guess so in 10 years you'll have 270K. I think annually compounding is better. All right, so yeah, so maybe my math was off. In 10 years you'll have you'll about 2x, 2.5x your money. All right, let's try 12%. Try to see how long it would take to get a mill. Yeah. All right, so here's a better argument against that. Yeah, here it is. So if you invest $200,000 and if you put 200K into index funds, right, and you let it sit for 15 years at a 10 to 12% interest rate, in 15 years you're going to have about 1.1 million, right? That is what this guy's saying. Is that if you just invest, in 5 years, like within 20 years, within retirement, you're going to be a millionaire. Now the thing to understand about this though is that in 20 years, $1 million is going to be much less money. It's not going to be as cool, right? Like $1 millionaire is not going to mean as much as it does now. Or really what it meant 10 years ago, 15, 20 years ago. Like a millionaire 20 years ago was like, they were living life. They were doing well. Now, a millionaire is cool, but like it's not the end all be all of wealth like it was. I know, but Angel, it's not about having 200K laying around, brother. That's not what it is, man. What it is you take 15% of your income and you put it into those things, right? So you take 15% of your income. You make 100K. You take 10K, or you take 15% of that. You take 15K, and you stick it in the market, right? And so yeah, so it'll take a couple years to build up that money, right? Each year that passes, you lose 10% towards inflation, for sure, right? But that's the point. Again, I've told people this before, but like if you have a sum of money, you take it. If I had a sum of money, right, it doesn't matter how much it was, up to a certain point. If I have $1 million, I might do dividend investing. Like if you have $1 million, you can just live off of dividends. You got $1 million, you can make what, like 30, 40, 50K a year just in dividend payments, and it's probably going to appreciate, and you're going to earn 10% or whatever with that. So, but I guess the point is, like, if I had a large sum of money, I would stick some of it in the S&P, some of it in the NASDAQ, some of it in real estate, some of it in gold, and I would just let it sit. Yeah, but I mean, having one good investment, in the 1960s, though, brother, that's 60 years ago. I could do the same compounding calculator. It's not going to be that many gains. But okay, say you make 12% a year over a 60-year period and you compound annually, right? Yeah. Okay. So again, this is what they're talking about, right? So again, and this is just the math. If you take $200,000 and you let it sit for 60 years with a 12% average annual interest rate growth, compounding annually, in 60 years, that 200K is going to turn into $180 million, right? 60 years is an obscene amount of time, though. Nobody has 60 years to wait, right? That's generational. But the point is, stick some of the money in the S&P 500, the NASDAQ. And again, when you start to understand that edge, you start to realize how silly a lot of these guys trying to short blue chip companies long-term are. Like they're betting against the biggest edge you'll ever have. And again, y'all can do it. People want to be contrarian. I get it. They want to be cool. But like the edge has got to be so low betting in those companies. I don't know, KC. 10 years is a long time, bro. 10 years is a long time, man. I mean, whatever macroeconomic situation we got going on right now is not really gonna... Nobody's gonna care in 5 years, bro. Like that's the thing you have to realize. Like, I get it, you're bearish, and I understand. And again, of course, you're gonna say, "Oh, I'm not bearish," and like I understand. But again, 10 years is a long time, dude. The market is going to go up over the next 10 years, certainly. Now, how much it goes up, again, it all evens out, right? Like, even if we do crash sometimes over the next 10 years, which is probable, right? We're probably going to crash eventually. The market usually rebounds within a few years anyway, even when we do crash, right? And so a 2-year period where we crash followed by a rebound period, that just means I'm going to dollar cost average into some of these big drops, or not DCA. I'm just going to average into some of these big drops if we do. And then the gains will be even larger if you play it right. But in 10 years, it's a long time. The market can change. Whatever macroeconomic stuff we got going on right now is not really going to mean much in 10 years. I'm a bear with bull horns. Hey, good luck, dude. Well, they're probably right, Yowzer, to be honest. Again, though, it's all about keeping up with inflation long term. Like, that's what they don't tell you, right? It's like they'll give you these numbers, right, where they're like, oh, you take 150K in 10 years, that's gonna be whatever. But what they don't tell you is that, like, whatever you make is gonna be much less significant in 5 years, 10 years. Just because of inflation problems. But that's the point of investing, right? If you sit on cash, you're losing money. All right. Got about 45 minutes. We do have some stuff coming out today. Hey, what's up, Chris? Yeah, I don't know. I think it's a slippery slope, though, V. I think number one, a lot of people just don't want to work, number one. And that's all right, But I think it's tricky because if you start taxing the rich super high amounts, it's going to discourage them from building those things and creating those jobs. It's going to discourage them too much at a certain point. I'm not saying we shouldn't tax them. I'm just saying, like, I've heard some people say, oh, well, billionaires should be taxed 90%. And it's just like, that'll never work. They're going to go overseas. They're going to leave, and then the country overall is not going to benefit from it. And that's what, like, a macroeconomic thing that people don't understand. And I understand people being frustrated. But I also don't think it's like, I think it's nuanced. But I also think that you should see wealthy people as motivation to be like that, not blame them for all your problems, and I think when you start blaming them, it just causes people to stagnate and not do anything. So I don't mind working. I just want to dedicate my life to a company for peanuts while the owners get all the cake. Right, but I mean, in that regard, start your own business then, man. I mean, that's the natural, result. I didn't like working for other people. I hated it, You just got to start your own business then. You got to plan it out. You don't just, of course, the follow-up is going to be, well, I don't have enough money to start my own business. And that might be true, but that means you got to deal with it until you save up enough money and then do whatever you want to do. And again, the average person when they start a business fails 6 times before they succeed. And that's absolutely true from my experience. I have failed in so many different businesses, and that's okay. I think people get their pride hurt when one of their businesses fail and they just don't start another one. And I think if you want to be successful at it, you got to just keep trying. And I'm not acting like I'm the most successful guy ever. That's not my intention. But yeah, I think you just got to keep pushing at it. Yeah, that's what I was saying. The people who think the Fed's going to raise rates tomorrow, it's surprising how many people think the Fed is going to raise rates. Again, it's so improbable that the Fed's going to raise rates. It's interesting to see how many people actually think they are. And again, I've told people this already. 1% of people think 1% of votes on the CME Fed Watch tool think they're going to raise rates tomorrow. 1%. It's probably less than that. I don't think they can go over that. But it's just very improbable that we raise rates tomorrow. We're almost certainly going to skip. And again, a lot of people are referencing the ECB. Again, the ECB. Earlier in the year, the ECB basically came out saying that they were going to be more aggressive and hawkish with their rate hikes. Like, they basically already came out and said that. And then when you compare that to the U.S. Fed, what they said, the U.S. Fed basically said that we're going to pause and we're going to be less hawkish. We're going to be more dovish in rate hikes. So that's the plans for the different ones. So my point is, they don't parallel in terms of decisions. At least that's not what they've said. All right. Yeah, having your own business is hard. Trust me on this one. Trying to build something is very difficult. It's incredibly difficult. And again, I think a lot of people rush it, right? And so the problem with rushing it is, and it's fine to rush it to a certain extent. Like, it depends on who you are and what your flaws are, right? If your flaws are you have a hard time like getting started at things, then rush it. Just get started. But again, the example I always use is, like, you see a lot of people that open up brick and mortar businesses, right? You see a lot of people open up brick and mortar businesses, and a lot of them do it because they just want to start a business. They just want to have their own business, right? And so they don't shop around for location. They don't shop around for like the right area, and they just kind of randomly rent some place that gets no foot traffic, that gets no business whatsoever. And then they invest thousands of dollars into this, and they rush it too much to where when they open the business, whatever it is, maybe it's a brick and mortar store, maybe it's an office, whatever it is, they just get no foot traffic and the business ultimately fails. You see it a lot with restaurants, you see it a lot with all of this stuff. And so again, location is incredibly important if you're starting a brick and mortar business. But the point is, a lot of people don't think about the different things. They just want to say that they own a business. They just want to say that they're running their own business, but they're not really planning for it correctly. And that's why you see so many of these brick and mortar businesses fail. So many of them is because they're not designing the business correctly. You know, for brick and mortar, you need foot traffic if it's retail sales. If you don't have foot traffic, you got to get in on Google. If you don't get in on Google, you're going to fail, But it's difficult. And again, even with all that, most of them fail too. I think the sweet spot is finding a business that's small and then making money from that business and then taking the money from that business and putting it into other things. And then that way, even if you lose the money, you're still good because you got other businesses as backup. One of the keys is just multiple income streams. You start creating different multiple income streams, and those compound over time and build and build. I think that's the right path. That's what's going to have the best accuracy for success. But again, I'm not claiming to be the most successful guy ever or anything like that. Circuit breakers. MXEUE on Quant Tower, which is for Euro US dollar. Indexes freeze for the past 30 hours. Does anyone relate? Is it because of the rollover? Let me pull Quant Tower up and see if it's from the rollover, because the symbols and futures rolled over Friday. So it could just be the symbols expired. So let's see, M6E. Try putting M6EZE. M6EZE. Try that. That should be. I'm assuming. I'm just going by the rollover symbol of mine. Let me see. M6EZE. Maybe not. I don't know. Yeah, I'm not showing any right here. Let me see. M6. M6E. Yeah, so it's M6EZ3. Micro look. So yeah, the new symbol is Z. The other one expired, I think, Friday. So try that. Yeah, so every quarter, future symbols roll over. Yeah, I'm not trying to start my own restaurant. I'm not sure, Alexandros. They probably covered, but I'm not sure. I would reach out to them. Market is already pricing, or has already priced in that the Fed would not increase rates tomorrow. Yeah, for sure. You think it's high probable that the market will be bullish tomorrow? I'm really not sure, man. I think it's possible we are, but I really have no idea. I don't know if we're going to get bullish or bearish moves. We'll see. All right, so again, we do have at 8:30 in 30 minutes, we have building permits, housing starts, Canadian CPI, and Canada is expecting 3.8%, and then month over month 0.2%. Core CPI, I'm not seeing the expectations. I see common CPI at 4.8% for Canada, and then we have ECB's Elderson speaking. And that's basically it. Yeah, well, again, the big thing this week, tomorrow, is the rate hike decision. You know, the rate hike decision is going to be wildly influential. And again, y'all hit that like button, guys. We got 96 likes. Pump that number up. Yeah, Chris. I mean, I bought my wife a 365 a couple years ago. Instacart IPO. When is the Instacart IPO? What is it? What's the symbol for it? I don't see anything for it. Yeah, so again, the SPY up slightly. NVIDIA is really what's dragging the market up. And so if you want to see what the market's going to do, watch NVIDIA. Again, NVIDIA is the big one that you know. Again, NVIDIA is influencing the market. Apple is heavily weighted as well. NVIDIA, if you look at a 10-day chart, over the last few days, it's down big, right? And this has been weighing in the market. This is why the market is kind of dipping down, is because you can kind of see NVIDIA. And again, the reason the market's reacting so much to NVIDIA is because NVIDIA is what pushed the market up over the last year. You know, again, NVIDIA had its crazy parabolic run. If we zoom out more than this on the NVIDIA chart, NVIDIA had its crazy parabolic run all the way up from 100 and basically $134 52 weeks ago, all the way up to 500 plus. It's still at 440, so it's still holding these gains really nicely here. We drew this trend and we did break this trend, but I guess we could stretch it out if we want. But I don't know if that's necessarily going to work. So I'm just going to remove this because I don't think it's following the trend. I think it's a long-term triangle pattern, but we'll see. Insta on the 19th. Today's the 19th. So what's the symbol for the Instagram IPO? they have less crime. Yeah, I mean, I don't know. Cart? No. When's it going live? After the bell today, I'm guessing, right? If it is on the 19th, it should be after the bell today. What are your thoughts on ARM? I'm in ARM right now. I've been in it since IPO day. We're down. But we did take some profit already. So we bought it on IPO day, sold after a big rip, and then now we're sitting on a small position that we're down on. So I'm just kind of still sitting on it. I'm watching it. The whole microchip sector has been weak, and that's affected it. But yeah, we're watching it still. Oh, I remember the Dudesons. Those dudes were crazy. What advice would you give for retirement investing in their 50s? So you're supposed to retire in the next 10, 15 years? Well, if you're retiring more soon, right? So like the logic, and again, I'm going to preface this with I don't know what the market's going to do, what's going to happen, whether this is the right advice. I really don't know. I don't really like giving like advice, and so this is not advice. This is just what I would personally do if I was in my 50s and I was retiring in the next 10 to 15 years. So basically what I would do is if I had to retire in the next 10 years and I was in my 50s, I would sit on more cash without question. I would sit on more cash, right? So I think like the more soon you have to retire, the less aggressive you should be, and the more cash you should sit on. It doesn't mean you shouldn't invest at all, but again, if you're retiring soon, the shorter term you look at markets, the more volatile and risky it can be, right? Because the good thing about long term is that even if we do crash, long term, time heals a lot of wounds in the market. And so like even if we do crash, within a couple years the market's going to be back up and running, and everything's going to be fine. And the people who lose the most are people who generally get emotional and sell during crashes. Now, if you're retiring soon though, you could get unlucky and get stuck in a crash, which is, by that logic, you want to invest a lesser percentage and sit on more cash. Again, that's what I would do, but again, it varies. You can also do dividends and live off of those. There's just a lot of things. You can do real estate and live off of that. You can do rental properties. I don't know. That's what I would consider. All right, so again, NVIDIA dipping down. Still a pretty green day, but it's nothing compared to the losses NVIDIA's had over the last 5. So again, here's a 20-day chart of NVIDIA. NVIDIA's down all the way from 480s back on the 5th of September a couple weeks ago. Yeah, it's marginal is what it is, V. And so for me personally, like under I have to look at the margins, but what I think it is under 100K I get taxed. I think it might be less than that. It might be like under 60 or 80K I get taxed a certain amount. Over 80K from 80K to 100 and something I get taxed a specific amount, and then over that I get taxed a specific amount. So it doesn't mean like if I make 200K I'm getting taxed. What's the Yeah, so if you make 200K, you're gonna have to pay about 50 of that in taxes. So your net pay will be about 150,000 per year. But the point is, it's marginal, and so you're gonna pay taxes the first 60% or the first 60K or whatever, you're gonna pay taxes on that, and then everything over that, you're gonna get taxed a little bit higher on everything over that, and then everything over the next milestone, you're gonna get taxed a little bit higher, so forth and so on. So it's marginal, is what that means. It's a marginal tax rate, is what the wording is for it. 30 years, the term multiple streams of income didn't exist. Well, the term might not have existed, but the concept certainly did. That's how Warren Buffett made his money. 30, around that time. Uh, I mean, the concept still existed. The term might not have. All right. Again, arms still breaking down. Microchip weakness. So microchip weakness, call it breakdowns here. Wow. Let me see. Okay, so what's crazy is billionaire Mark Cuban lost almost $900,000, almost $1 million in a crypto scam. It basically says that he was inactive for a long period of time, and from what I can gather here, like hackers hacked into his device, and they didn't do anything, and they waited, right? Because he was inactive for like 3 months or something like that. When he from what he said they must have been watching him, because afterwards his entire or a lot of his crypto holdings were drained. Not his entire holdings, but a lot of his crypto holdings were drained. His wallet was drained of a number of stable coins, Lido staked ETH or ETH, super rare and Ethereum name service ENS domains. And so, yeah, he was drained almost $1 million. So again, hackers must have been just kind of sitting patiently waiting for him to log in. And again, he must have been being watched, is what he was saying. He quoted to say they must have been watching. He told a news outlet that he had jumped on MetaMask for the first time in months, and they must have been kind of sitting there watching him. And then once they saw his login stuff, they just drained him, is what I'm guessing here. So yeah, let me know what you guys think. But Mark Cuban just got drained of almost 900K in crypto. Rough time for him, man. Let me mute the music for a second. I mean, Mark Cuban can handle the losses. Okay. No, this is why I freaking tape up my phone's cameras, bro. I don't want my phone cameras seeing anything. I always reset my phone. I'm always very like I don't understand the people that go to sketchy websites, dude. Like I don't want any of that stuff. Yeah, so Mark Cuban. Yeah. Yeah, dude. You need to factor. When his stock become available at Top Step, I'm trading Combine right now, and I don't have many options to trade. Well, you could trade the S&P 500 Alexandros, you could trade the Nasdaq and what's called the E-mini. The symbol I trade regularly, and again, I in no way can guarantee you're gonna make money from this. Nobody can, all right? But what I'm specifically trading is the S&P 500. It's gonna move a lot like stocks. You can't trade actual stocks. There's too much red tape. If you know, again, they don't do stock futures anymore, but there's index futures. So you can trade what's called the E-mini. It's the symbol is ESZ3, I believe, is what the symbol is. Is the updated symbol is ESZ3. Is the S&P 500 futures contract basically the SPY? You can trade the Nasdaq and the NQZ3. You can also trade the micro ones, which have a little bit less range. So, like the regular E mini, it's going to move 12.50 per tick, right? So, if you got two contracts or four contracts, it's going to move $50 a tick, right? So, every move up, tick up or down, you're going to lose or make $50. The range is crazy big, right? You can scale down your size a little bit by trading micros. Like the micro E mini, every tick up or down, you make $1.25, right? So if you got four contracts, you're gonna make $5 every tick up or down. It's much smaller size, although there are more commissions and the margins are worse because of the higher commissions. So once you get used to the risk, I usually never trade micros anymore. I almost trade uh, the regular E minis. That's like $50 to the average person. Yeah, I mean, but you actually trade stocks. Yeah, I mean, I trade stocks on TOS, but it's not Top Step. Like this isn't Top Step right here. Like this is Thinkorswim, TD Ameritrade. Um, and so again, like I've already got a funded like one of the biggest critiques from like day traders is like, oh, this dude, like number one, I'm funded in multiple Top Step accounts, but like my TOS accounts also got like 60K in it. I've got like 200,000 in buying power that I can use whenever I want. Um, and so I don't necessarily need to trade Top Step. I still trade it because I think it's great. And again, if you want to check out Top Step, great way to learn, right? There's just again, people complain because they lose, but the reality of it is most day traders lose money. It doesn't matter whether you're on Top Step or whether you're somewhere else. Most day traders lose money. Um, and so you can either put up thousands of dollars and risk thousands of dollars yourself trying to day trade, whatever, where if you try to day trade stocks, you're going to need at least 25K anyway, which, again, most people don't have 25K, but the futures market has no PDT rule. So you don't need 25K in futures. And Top Step's actually allowed. And in futures, you can day trade the S&P, you can day trade the NASDAQ, you can day trade some currencies, you can day trade gold, so forth and so on, right? And there's no PDT rule, and they fund you if you can pass their testing. So they give you a demo, they test your skill. If you can pass their tests, the base one, they give you 50K. If you can hit 3K in profit without losing over 2K and following their rules, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. And so, and again, most people are going to fail these because most traders lose day trading. It doesn't matter whether they're on Top Step or not, but it's so much cheaper to learn on Top Step than put up thousands of dollars yourself. You still learn how to trade under pressure. You can still get funded if you're good enough, and if you lose, you're going to lose much less than you normally would if you put the money up yourself. For most traders, I would say. But again, I'm certainly biased in their favor because they pay me money and they're a sponsor of mine. So I'm definitely biased, but I really do think it's useful for traders. And if you want to check it out, here is the link. Great way to help support the channel. Sorry, Bruce recently got fixed, and so he is moody to say the least. Hey, bud, love you, man. You feeling okay today, man? Have a good day, dude. Love you, buddy. Bank of America boost AI. Yeah, I have to look. Watching Nvidia closely. The market's starting to fade back down though. Again, watch Nvidia. Nvidia is going to influence stuff a lot. No, no pups for Bruce. We don't have the time for it, man. I feel bad, but he'll be all right. It was time. Yeah, the other day, Rosie ate my wife's garden. My wife's been working on this garden for months. Um, Rosie Rosie, Rosie waited for her to be gone and went in her garden and, like, dug it all up. Rosie's like a she loves to dig, you know? And so she went in her garden and, like, tore it all up when she wasn't there. And originally, my wife thought it was Bruce, but we noticed every time Rosie would get close to the garden, she would get really, like, timid and, like, run away, which means that she did it. So but yeah, now she knows, but if inflation going down, thinks so, not any other choice to raise interest rates. Yeah, it's highly unlikely, guys, that we're raising interest rates tomorrow. It's highly unlikely that we're raising interest rates tomorrow. Again, it's just very improbable. Like again, 99% of people think we're going to pause or skip, and generally we go with what the votes are on the Fed Watch tool. Like the Fed Watch tool hasn't been wrong in a long time. And this one is very polarized. So, again, even people were referencing the ECB. The ECB was almost 50-50 split. It might have been like 60-40, right? So there was still a big chance that they were going to raise rates this last cycle in the ECB. The US market is not the same. The US market, 99% of people think we're going to pause or skip. And so it's very improbable that we're going to raise rates tomorrow. But with that said, if we somehow do raise rates tomorrow, which is again very unlikely, but if we somehow do, market's going to go down almost certainly. But again, I just don't think that's going to happen. I think it's very improbable. I think it's most likely that we're going to pause or skip tomorrow, like everybody thinks. And again, what's going to matter more than any of that is what Powell says during the interview. Whether he's dovish, hawkish, which dovish means an expanding monetary policy. Hawkish means a contracting monetary policy. So what matters more than any of this is what Jerome Powell says during the actual press conference. No rate hike, but Powell will be very hawkish after the inflation numbers the past few weeks. Yeah. Yeah, Rosie loves to dig. So we actually had to get our backyard fixed because Rosie, when we first got Rosie and she was a puppy, she dug so many holes in our backyard. We had to get like cemented rock put in where the holes were. So like she destroyed our backyard when we first got her. So we had to get like cement and rocks. And I actually like it more because I can play catch with the kids more now. But yeah. Uh yeah, Powell. People talk about Powell, but Powell, he's made some money. I know you only get paid about 200K with Powell's job, which is not that much. I'm not saying 200K is peanuts, but like for the Federal Reserve chairman, not that much. But yeah, but Powell's net worth again. Powell used to work at an investment bank. So Powell's net worth is between 20 and $55 million. Powell's rich, rich. Because again, Powell used to be an investment banker. That's where Powell really made his money. But with that said, he's got a big understanding of financial policy. He served on the boards of major companies as well. I think specifically the investment bank he made his wealth in. Is ARM going to be added to the Nasdaq 100? All right. So again, Adam Aaron talking about AMC. He said, "We are halfway through my Twitter poll on AMC branded fine wine with 68% of you saying go for it. Getting many responses from you about our doing an AMC branded craft beer at our theaters as well. We are liking the name Great Ape Ale. What do you think, bro? Listen, Adam Aaron's just pandering to you guys at this point in time. Like he's putting out these little things that pander to the AMC ape community, but he's making decisions that go against their best interest. Right? So it's I'm not gonna say it's funny, but it's interesting that like he says everybody the ape divvy is gonna be the greatest thing ever. Stock tanks, people lose a bunch of money. They consolidate shares and they convert the ape divvy back against everybody's wishes. Again, AMC traders lose money. They dilute shares. They do an offering. AMC loses money. But yeah, guys, he's gonna name a wine called Grape Ape Ale or a beer called Grape Ape Ale for you guys, right? So he's okay. You know, it's like think about it. Take a step back. Like number one, that's not gonna save AMC. The margins on that have got to be very low. Yeah, when I read the comments, everybody's just so again, man, I'm gonna be honest with you guys, man. A lot of this community seems to be propped up on influencers. Okay, you know how many AMC influencers propped up, like popped up over the last 5 years, 3 years since the AMC craziness, right? Like a lot of them don't actually believe in it, man. A lot of these guys don't actually believe what they push. They're just trying to grow a following, and you guys eat it up hook, line, and sinker, man. Like a lot of these guys don't even care. Like they are just putting out whatever crazy conspiracy theory they think will get clicks and views, and then pandering to everybody in that community um, just for follows. That's what they're doing. I've seen so many AMC influencers sprout up and then go bye bye after like the market dries up. So I mean, and of course, the influencers themselves will say, "Oh, that's not true. This dude's just a hater. He's never been supportive of AMC or whatever they want to say, right?" But that's what's going on. All right, guys. Hey, we got 6 minutes before building permits, housing start data drops. 6 minutes. Canadian CPI goes live in about 5 minutes, actually. Why don't people in the government get charged for insider training or trading? Because they're in the government. Yeah, Jerome Powell's got a tough job. I'll say that. Jerome Powell's got a very difficult job. The reason for that is because Powell, bro, it doesn't matter what happens. If the market goes well after Powell's decisions, nobody gives him credit. If the market tanks, everybody blames him, and he makes 200K a year doing it. Now, I'm not saying I wouldn't take that job if they approached me and they were like, John from Beginner Trading, will you be the Federal Reserve Chairman? Absolutely, I will. Uh, but yeah, again, I guess what I'm saying is you shouldn't make Powell the face of everything you hate. Like he's just a guy doing a job, and it's a tough job. A lot of criticism comes his way. You can see he's aged, since taking that position. Oh wait, the music's not live. My bad, guys. There you go. Yeah, cheap wine. Like, bro, like that's gonna save your company. They did the popcorn thing too. Like, oh, ape popcorn. It's like, bro, popcorn. Like, why don't you come up with an actual better plan for your business than popcorn? Popcorn's not going to save the business. Again, what it's doing is it's pandering to shareholders. That's all it's doing. Popcorn's not going to be like popcorn. Got to be low margin business, right? It's not going to save AMC. Oh yeah, for sure. The game would look great. We looked great against Mississippi. We looked great, man. Again, I think Florida State's just good this year. All right, guys, 2.5 minutes. 2.5 minutes. Building permits, housing start data dropping soon. 2.5 minutes. See what we get today. Yeah, I mean, Thomas, I don't root for one side like it's my football team. I think the more you are to root for one specific side, because I think they're both toxic in their own ways. Both sides are toxic in their own ways, and I think if you get really wrapped up in rooting for one side, you know, again, that's fine, but you know, I think I think that just shows gullibility, if that's even a word. But yeah, I digress. I'm just not a big politics guy. I just dislike the whole realm of politics. I think the more people get wrapped up in politics, you know, again, the more gullible they are. It's fine to be about policies and watch politics, but again, if you're rooting for one side like it's your football team, somewhere you've been misled. Uh, yeah, good luck, Mark. All right, guys, here we go. We got a minute left. A minute left. All right, guys, 1 minute. Again, SPY back up to 44s, right around the volume weighted average price. Again, we got 40 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. We're also going to throw this in sub only mode. So again, everybody announce yourself if you're subbed. Show that you're supportive. We are in sub only mode now. All right, let's see what we get. 20 seconds, 20 seconds. Canadian CPI building permits are expected to show up at 1.44 million. Housing starts 1.44 million. We got Canadian CPI expected to drop. And here we go. Here's the release right here. And there's the building permit data. All right, Canadian CPI came in higher than expected at 4% versus 3.8% on the year. On the month, it came in at 0.4 versus 0.2% expected. Canadian CPI higher than expected. Building permits for August came in higher than expected at 1.543 million. 1.543 million. Housing starts showed up at 1.283 million. 1.283 million. So lower than expected. So lower than expected housing starts, higher than expected building permits, and higher than expected Canadian CPI. That is basically what came out. So higher than expected Canadian CPI, lower than expected housing starts, higher than expected building permits. And so far, the market has reacted somewhat negatively. It's not a huge reaction here. And we'll put this number up on screen. Again, it's not the biggest reaction, but yeah, that's basically what we're at right now. Again, the big one is building permits. It came in higher than expected at 1.543 million. House starts came in at minus 11.3%, 1.283 million, lower than expected housing starts. Oh, it's a drop for sure. It's definitely not a small drop. Again, we are going to be trading at the opening bell. And here's housing starts. Again, Canadian CPI showed up higher than expected. All right. So here's the full list of data right there. Again, building permits higher than expected, housing starts lower than expected, Canadian CPI higher than expected at 0.4 versus 0.2. So dipping down a little bit on markets here. It's not the biggest reaction, though. It's still pretty flat. But this isn't the biggest release either. All right, team. All right. Again, we're going to get ready to trade at the opening bell. We got about an hour before the opening bell. And if you haven't already, check out Top Step. Top Step funded program for futures. Again, what they do is they give you a demo, and you can basically trade this the SPY, right, which is the broader market. You can day trade this in futures with no PDT rule and what's called the E-mini. You can also day trade the NASDAQ, currencies, gold, silver, no PDT restrictions, and these funded account programs are allowed. They give you a demo and test your skill. And again, just taking the challenge builds you into a better trader, in my opinion. There's less risk than putting up the money yourself, and if you're good enough to pass it, you still get a 90% split, and you get to keep your first 10K in profit. And so it's kind of the best of both worlds, in my opinion, but I am biased, of course, because they pay me money. And so if you want to check them out, there's the link. Great way to help support the channel. What's the difference between a skip and a pause? A skip implies that we're just going to skip one and go back to raising rates the next. Right, so we're just going to skip this rate hike, and then we're going to go back to raising rates on the next. A pause shows that we might hold at those levels, right? We might stay, right? So, yeah. So a skip implies that we're going to skip this rate hike, but then go back to rate hikes after one pause, cycle. A general pause implies that we're going to stay at that. If that makes sense, right? Yeah, for sure. The FOMC has a lot of members. It's not just Powell coming up with these decisions. You can see the reports by the Fed and see all the different decisions that they make. Again, SPY's still technically green on the day, although not very green, but still technically green. Yeah, I mean, market's down some. It's not a huge reaction, though. It's down, but not a big reaction here. Again, remember, tomorrow we have the FOMC meeting rate hike decision. It's big. Tomorrow's supposed to be a skip or a pause. I really don't know. Oh, I'm sorry. I do know. Tomorrow's supposed to be a skip or tomorrow is probably. So we've been on a pause, right? So like last time we didn't raise rates either. And so this will be 2 consecutive pauses in a row, right? I think we're actually going to go back to raising rates in November. My guess is that we're going to, continue to pause this cycle and then go back to raising rates the next, right? So my guess is like this cycle we're going to, and we're testing the previous closing price. So we're testing the lows here of red to green. We're testing the going from red to green on the market. But yeah, my guess is we're going to pause tomorrow and then go back to raising rates in November is my guess. Hey, nice traveling. Hey, nice Todd. Did we raise rates last time? Let me see. Okay, let me look at this. All right, so July, in the July meeting, okay, yeah, we did raise rates last time. So if we raised rates last time, that would imply that tomorrow is a skip, right? So we are raising rates, skipping rate hikes tomorrow, and then going back to raising rates in November is my guess. We don't know for sure what we're going to do in November, but it's pretty probable that that's what's going to happen. Hey, what's up, Volt guys? What's up, team? Hey, thanks so much. Right, in July. So in July, we raise rates. And so what I mean is like not last month. The last cycle we raised. This time we're skipping, and then next November we're raising. It depends on what we do in November, but I think in November we're probably going to be raising rates, right? So I think this will be considered a skip or whatever. I'm going to go to the restroom real quick, guys. I'll be right back. Oh, yeah, while I'm gone, we're going to do a poll. We're going to do a poll. Does the Fed raise rates in November? Okay, does the Fed raise rates in November? Let me know what you guys think, and I'll be right back. All right, we're back. So yeah, let me know if you guys think the Fed's going to raise rates in November. Market's still testing these lows down here. Yeah, I think I don't think we're going to again, I don't think we're gonna raise rates tomorrow. I think it's very improbable. And again, I've said this over and over again because it's true. It's just very improbable that we raise rates. I mean, I'm not saying it's impossible. We could, of course, raise rates tomorrow. I think if we do, we're going to see some pain in markets. I think the market's going to dip heavy if we do decide to raise rates. The question is what we do in November. Because, again, it's just very probable that we pause or skip tomorrow, especially with us raising rates last time. Still inflated. Yeah, I mean, inflation's, of course, still a problem. But we raised rates last time, and again, you can look at the people who know the most are banks and analysts, and 99% of them are expecting a pause or a skip tomorrow. And so what that means is that it's just very probable that we're going to pause or skip tomorrow. It's very improbable that we're going to raise rates tomorrow at least. Now November's a different story. In November, anything could happen, and so we'll see. But again, it's just very improbable. Is my mic not good? Have I gone to the gas station? Oh, you're talking about gas. Oh, Canada is raising a quarter today. Is Canada raising rates today? Is it their rate hike decision? Let me see. No. Canada Canada did drop their CPI today. Canada CPI came in at 0.4%, so higher than expected. So it did come in. Canada CPI did come in higher than expected, and so that's something to understand. Canada market doesn't always mirror ours though, but our next inflation report's not going to be for another month at least for CPI. We do have PCE next week, right? So PCE comes out next week. But yeah, so PCE comes out next week. Yeah, it isn't a surprise because of the shock to public sentiment. Yeah. I mean, again, it's just very improbable that the Fed's gonna surprise and shock everybody. Again, we're not the ECB. The ECB has actually come out with a much more hawkish tone regarding interest rate hikes for the rest of this year. The Fed said in May that we were going to be a lot more dovish than the ECB. The ECB basically said rate hikes moving forward. And again, that kind of shows because most people expected a pause this latest ECB rate hike decision. And they actually went and surprised people and did a rate hike anyway of 25 basis points. But again, I don't think the US is the same. The US is just a different market. It really is just a different market. And so, yeah, that's the thing to understand is that the US is just different. It's not the same. Again, we'll see what happens, but yeah. Yeah, cheap wine. I mean, I don't know what they're thinking, man. Like AMC acting like coming out with cheap wine is going to save their company is silly. It really is. Like, oh, okay, come out with a wine that'll save you. Like, come on now, man. They should know better than that. Sorry, I'm kind of having to mess with something over here for my son's school. But yeah, I don't remember the last time the Fed shocked us. Markets, maybe. I mean, again, yeah, I cover all these major economic reports. I very rarely see a shock in terms of rate hikes. Like, I very rarely see a shock in terms of rate hikes. Almost always, it comes in as expected. So I think that's what we should expect here, is to come in as expected. Again, somebody else mentioned this, but it's surprising how many people don't understand like probabilities for these rate hike decisions. You got a lot of people here. I see a lot of people here expecting a skip or a pause or expecting a rate hike, which is just super improbable. It's just not very likely. And again, y'all want to understand too how unlikely it is that we skip or that we raise rates tomorrow. It's very unlikely. It's not impossible. Anything could happen, but it's just not very likely. Yeah, 99 to 1 pause. If we look at the CME watch tool, again, I put this up a number of different times already. If you look at this, it's just very unlikely. Again, 99% of people think we're going to skip or we're going to skip or pause tomorrow. 99%. So 1% chance. It might be greater than 1%, but it might not be. I just think it's super unlikely that we're going to surprise people and shock the system and raise rates tomorrow. I just think it's super unlikely. All right. But so many people feel, yeah. I mean, I think a lot of people are just really rigid with their views, right? So it's like if you're bearish in the market, you want them to raise rates. You know, if you're bearish on the economy, you want them to raise rates. If you're bearish overall, you want them to raise rates. And even though it's highly improbable against that, a lot of people are just so rigid in their viewpoints that they just refuse to look at the other side and refuse to even acknowledge that, you know, that's where you get such a um, that's where you get such a split thing where so many people, almost half the people on my polls, are voting for a rate hike tomorrow. It's just so improbable. And again, maybe I'll eat my words tomorrow, and maybe tomorrow they'll come out and show, uh, you know what I mean? Maybe tomorrow I'll eat my words a little bit. I just don't think I'm going to. Yeah. Well, the market dump tomorrow if Powell says they still have work to do? Probably not on those specific words, Ricky, because again, you got to understand, like, he's going to say that. He's going to say, I'll put it this way, almost every meeting, he says, we still have work to do and inflation is still elevated, right? So you better believe he's going to say that tomorrow. But that's not necessarily the most bearish thing. I think that's kind of what we should expect here, is that's what he's going to say. He's going to say inflation is still elevated. We still got work to do, right? And that's all right. Like, that's okay. I read that there was already another rate hike baked into the market. No, I think the market's mostly baked into a pause because that's so much what's expected. You know, and again, it's a slippery slope type of thing. It's tricky, right? Because again, the more aggressive the rate hikes, the more short-term pain the markets endure, but the better long-term damage to inflation that's done. You know, so again, if you're really fearing inflation, you should want there to be rate hikes. Like, you should want them to raise rates because that's ultimately going to do more long-term damage to inflation versus a pause or skip, which is going to cause more stability in the market short-term, but ultimately do less for inflation long-term. It's a balancing act. It really is. And so, but again, I think the Fed is trying to balance. I don't think they want to just beat it down and crash the market and then play cleanup. I think they're balancing it. The Fed's very balanced in what they do. And so again, it makes sense why last time they would raise rates, this time they would pause, next time they'd raise rates, the next time after that, the last meeting of the year, they're going to pause. And that way it's 50-50. I think that makes the most sense from the Fed. And I think that's probably what the Fed's doing. You can also see the SPY did end up breaking under the previous close here. So the SPY did end up breaking under the previous close. Oil breakout? Is oil breaking out? Yeah, let me look at Exxon here. I mean, oil might just like the fact that the data came out. Yeah, I see Exxon breaking up 2 pawns. So Exxon and oil breaking up. Look at slash CL, which is oil. Big breakout pawn just brought to my attention. Let's watch this little low right here. Maybe here. I don't trade. What's the profit or loss per tick in oil in the CL pawn? What is it? All right, so it's $10 per tick for oil. Dang, look at that. Would you look at it? Again, ExxonMobil all the way up to 118.50s. We got that pullback on oil, though. I'm tempted to buy a little bit here. Is it CLZ3 just like the other ones? Yeah. All right, so we're adding into that position that we talked about. Goal is hopefully we get a bounce right around there. Might have added a little prematurely here in oil. All right, so we're almost green. All right, so big rip up about $70. I want to give it time to go up a little bit more. Take half off there. All right, so we just made like $140 somewhere around there in like 3 minutes. So we'll take that. Again, well, this is oil. And so we'll see if we keep pushing on oil. But again, just kind of buying the little dip around a major support level works really well. Just for a little quick short-term scalp. You got to wait for volatility. Like you can kind of see oil finally got some volatility. Pawn alerted me of this. And so once they get volatility, I love attacking. There's just little pullbacks. It can just be really profitable. A lot of people will buy at high of the days, but high of the days are kind of experienced traders are taking profit at high of the days. Um, and so I usually don't buy it there because a lot of the time people sell at those levels because it's the top of the range. And so instead I wait for it to test the top of the range and then buy a pullback and then try to ride a bounce up. That way, if it rejects at the high of the day, I'm safe. That's my logic, at least. Let me know if you agree with it. But yeah. And so, yeah, he was drained almost $1 million. So again, hackers, Cuban. All right, so the market's still pretty weak, but yeah, look at oil bounce back up. I could have probably stayed on that a little bit longer, but all right, guys. Yeah, oil ripping all the way back up to 92s, man. Wow. All right, so again, markets. Look at oil, man. CL just ripping up. CL futures, oil futures up there to 92s. Hmm. All right. All right. Let me get the music back on. There you go. All right. Man, it's never clean for the Bears. I mean, it can be, but why is Disney down? Probably because it's up so much over the last, you know. If you look at a 10-day chart for Disney here, look at oil rise. But if you look at Disney here and you look at a 10-day chart or so, like look. So Disney's had a big uptick from lows. It was really weak prior, but it's had a really nice run. And so we'll see if it holds. Again, we're still in a little bit of Disney here. We got 20 shares left. We're up like 70 something on those. But we've already scaled out of most of it. Average price on Disney, as you can see, is 81s, right around 81. So Exxon, man, doing great this morning too. I like Quant Tower, Robert. Quant Tower is my favorite. But everybody's different, and I like Quant Tower. I previously liked Trade Evade more, but I switched to Quant Tower, and I haven't gone back since. I just like it more. All right, we're going to get ready to trade some more. Again, we made a little bit on oil this morning. I'm not sure, Alexandros. I would look. There's somewhere. You can find it somewhere. I'm just not sure where you're going to find it. And again, oil just popping up big. Look at a Disney dump. Again, luckily I'm out of this position. Or no, I'm out of most of the position. We're still holding a little bit, but it's 10 shares or 20 shares. It's something small. Yeah, it's 20 shares. So we're down like 25 bucks today. But something's going on with Disney. Again, we might add a little bit more to it if it looks weak. What did I add to this morning, man? I added to something. It wasn't Disney. It wasn't Ford. It wasn't Apple. It was Target. I added more to Target. But yeah, Disney slamming down to 83s. See if we can figure out what's going on here for it. Look this up. All right, so Bear temporarily shuts down portions of Disney's Magic Kingdom Park, according to the Wall Street Journal. This dropped yesterday, though. I don't see any recent news. Disney are developing plans to accelerate and expand investments into Disney Parks experiences and product segment. It's weird these drops in Disney are coming right on the foothills of this. But right now Disney's all the way back up. Exxon's still flying up at 118.50s. So a stealth jet. An F-35 went missing somewhere over South Carolina when the pilot ejected due to a mishap. And now the stealth abilities. How are they going to do? What are they going to do? Hmm. Disney, again, I don't see any other news aside from the Disney plans news. Microsoft lifts its quarter divvy to 75 cents a share. Previously was 68 cents a share. So that news just came out as well. Exxon's still breaking highs here. Looking good. Oil's still pumping up too. So again, Microsoft lifting its divvy. Yeah, again, a lot of the time, guys, like to understand the market right now, number one, is the market might be slower, although the SPY's break it down. But yesterday, we're basically flat over the last couple days, which is not a shock or a surprise, right? Most of the time, heading into these FOMC meetings, the market's quiet and boring. There's just not much going on heading into these FOMC meetings most of the time. And so that's the same thing today. Like, market's just flat and boring. There's just not much going down right now. Yeah, oil's ripping up again. Disney down to 83s before bouncing back up to 83.50s. Again, they have this news for Disney that they're developing plans to accelerate and expand investments into parks, experiences, and products. It's a slow time of the market here. We just don't have a lot going on. It's September slump, right? September's generally pretty slow. So it's just slower right now. Put it into perspective, though, the market starts to heat back up next month. So next month's when we get a hotter market. Not only do we have earnings season starting next month, but we also have like just more activity generally in October than in September. Yeah, I'm not buying this yet. It looks too difficult and risky. Again, Disney back up to basically 84s again. So yeah, I got in the first pullback and then it ended up working out and continuing to rip, but who knows if it'll keep ripping. Yeah, I'm looking up some new changes. Stock prices are way too high. Define too high, though, D. You know, again, you got to understand, like, the natural flow of market is up long term. Short term, anything can happen, but the natural flow of markets are up, right? And so, you know, to put it bluntly, you had a lot of people betting on Apple's demise in the 90s, right? Everybody thought Apple was done for in the 90s. It was over with. Apple was just going to be another bump in the road of tech and that everything was done. It was going to be another Netscape, like Microsoft, same thing. So in the end, what you'll notice is like generally those people are on the wrong side of the history of markets. Because again, if you look at Apple now relative to where it was in the 90s, you kind of see, and so it's fine to be short biased, but you also have to understand the normal flow of markets, which is up. Yeah, but that was 3-4 years ago. That's half a decade ago at this point. And so again, maybe look, Disney bouncing all the way back too. Look, Disney back up to where it was. Interesting. Burgers are way too expensive. Hey, maybe so. I can agree with that. I love hamburgers. They are too expensive. I agree with you there, bro. And the SPY and the E-mini are down. A little too extended on the downside for my taste here. So maybe we'll short, but we need a larger bounce back up to like here maybe for us to short. I'm just not interested in shorting it. Yeah, but Five Guys has always been $20 a burger for a burger and fries. It's always been $20 each. I remember when it opened up like before the pandemic, and it was the same prices, bro. I remember thinking at the time, dang, you know. And so it's always been expensive. Those fries are good, bro. The Cajuns, get the Cajun seasoning. Yeah, but even if we have been in part, like even if the new traders have seen money printing a lot and all that stuff, Casey, again, regardless of what decade we're in, the market's mostly moving up. Doesn't matter whether it's the 2010s or the 2000s, market's going to go generally up. You know, the only problem with 2000 to 2010 is that you had the dot-com boom and bust, and then you had the mortgage crisis, right? But that's not always standard. You know, most of the time the market's going to move up over time. It's one of the reasons everybody always tells you to buy and hold blue chips and broad market ETFs, is because that's the natural flow of markets. Again, when we look at the market on a technical perspective, right? If we look at the SPY, again, I've been saying this for a year when a lot of people have been really bearish and telling everybody the market's going to fail and the market's going to crash, right? But if you look at the market here, like we've already had our little dip. So it's like, again, you can kind of see the normal flow of markets here, which is generally up, you know, 90s, the 90s, you know, went like that up until the 2000s. 2010s went like this. We have this little slump now that we're on our way out of. And so again, right now we're kind of on our way out of a slump. And so when we zoom in here, we've already had a recent slump in markets. Like we've already had a recent slump in the 2021s and 2022s where we dipped and had a bear market for a year plus. And now it doesn't mean we're not going to keep dropping. But again, what I see here is like people acting like we're just, usually when we crash, we're extended on the upside. This time, we're not even, like we haven't been close to highs in a year plus, you know, so we've been dipping down for a while. And now we're slowly kind of fighting our way back up towards those previous levels up here. Right, but we haven't seen these levels all the way back since, let me see the dating here, late 21. So it's been 3 years since we've been close to these highs up here, or 2 years since we've been close to these highs. And maybe we keep breaking highs, maybe we don't. But again, what I do know is that when you zoom out, wrong one. When you zoom out, this is what the market generally looks like over time. You know, this is what the market generally looks like over time. The market's generally going to go up over time. If you zoom out even further, let me see if it lets me. No, that's the SPY. If we zoom out even further and we look at the S&P, that's what the S&P does too. You know, all the way back to the 30s, 20s. So again, here was the 1929 stock market crash right here. Really obscene levels prior to that though. And again, the biggest boom that I see here was between 1950 and the 1980s. And then we had the biggest correction here in the 2000s, really. Maybe the mortgage crisis, you could consider that. But maybe we'll have another one. Again, nobody knows for sure. All I know is long-term markets are generally going to go up. All right, we might buy or short the E-mini too if it bounces up enough, but we just kind of sit and gotta wait. What came out days ago? Yeah, I like Five Guys though. They're so good, dude. Bro, when I get bullish, it dumps. Well, you're not holding it long enough then, and you're probably buying up penny stocks or mid caps that are crap. Yeah, but I mean, that's mostly sensationalism, KC. The reason it's sensationalism is because, of course, those countries don't want to use the US dollar. Those are not our biggest allies in the world. Like, oh, what a shock. China doesn't like us. Oh, wow. Russia doesn't like us. Wow. The Middle East, some of the Middle Eastern countries don't like us. It's not a shock. Of course, they don't want to use the US dollar. But again, I don't think that there's any threat to them. But maybe I'm wrong. But either way, like, again, I think over time, everybody always thinks that this time is different and that the market's going to be long-term down. And maybe it's the case, but history has proven that to be very low probability. So I'm just going to stick on the right side of probabilities. And maybe I'm wrong. Again, if it does, maybe I'm wrong. It's possible. I'm trying to go with the easier, safer bet. And again, we'll see who's right. Who knows? Oh, options, of course, bro. I mean, options are too restrictive, though, dude. I never understood why people, like, the only way you should be trading options is if your account's not large enough to buy shares, right? That's the only reason you should be trading options, is if your account's not large enough to buy shares, or futures. Depends. Futures different, though. Investing, you should buy shares, not options. Again, options are far more restrictive. Time decay, the Greeks, again, shares are just more preferable. And so you could buy options, but the risk is much higher. I'd like to just sit in something as long as I need to, instead of having time decay kill my trade before the options even expired. Like, that just doesn't make sense to me. And again, options are great if you have a small account and you don't have that much money and you want to, get some volatility there. But again, with that volatility comes risk. And so you got to understand that too. Right, 100%, Todd. That's exactly right. He said if a company speaks bad about us, they're usually doing it to destroy public sentiment. Exactly. Right now, you got everybody saying, "Oh, like BRICS." Like, it's like, no, like, of course they don't like us. Of course they want a different currency. It's not a shock. It's not a surprise. It should be a pretty reasonable expectation, I think. But again, it's just sentiment. And again, people weigh in. A lot of the time, the biggest people who bet against the market long time are people that just get too wrapped up in politics or news or whatever it is, right? I think you have to be objective and look at it and look at long-term history, as well as understand the different types of propaganda that float out there on a regular basis. Again, a year ago, everybody was talking about the market was going to crash. The SPY was at 350s. The market was going to crash. It's the end of the world. We had so many people here saying, "Oh no, it's doom and gloom, into the world," right? You fast forward a year and the market pushed up so much over the last year. It's up like almost 20% now. Almost 20% is what the S&P 500 is up in the last year straight. You think a lot of retail took advantage of that? Of course they didn't. They ended up betting against the market short and then crying manipulation when it ripped up. That's generally the flow. And again, I always tell people the same thing. Nobody cries manipulation more than somebody that's wildly wrong about a prediction, or somebody that's holding something, or somebody that had the market turn against them. Nobody cries manipulation more than that person. And again, we'll see. But You can be bearish, DS. It's all good, brother. Be bearish, dude. I'm not mad at that. I short every day. I shorted today. Or I don't know if I shorted today, but I short every day, bro. I'm not mad at you for being bearish. Again, if you're bearish long term in blue chip, large cap, broad market ETFs in the S&P 500, the Dow, the Nasdaq. If you're shorting those long term, no offense, but that's a sucker's bet that people who don't really understand the market do. But you can be, if you're shorter term, pun intended, that's fine. I understand that. Like, bet against the market. I don't know what the market's going to do. I might be wrong. Maybe the market goes down. I don't know. Hey, later, Chris. I hope Disney drops. Maybe. Yeah, they said we were supposed to be in a recession right now a year ago. They absolutely did. They got mad at me. They called me dumb. They said I didn't know what I was talking about. A lot of the people that did are pretty quiet nowadays. But hey, again, maybe we do hit one. I don't think we're going to hit one this year. But we might hit one next year for sure. Hey, good luck, Twan. Oh, no, I have separate long term. Then you're good, bro. Yeah, I'm not mad at shorting then. Short until your heart's content, brother. I'll short a lot short term, too. All right, guys, we got 11 minutes. I'm just kind of hanging out. Again, it's another low volatility day, man. We got the rate hike decision tomorrow. Do me a favor, hit the subscribe button if you haven't already, guys. Hit the notification bell. I appreciate it. Recessions happen. Oh, 100%. I'm not saying a recession's never going to happen. Yeah, I mean, again, I would say the people who are generally the biggest screamer of recession are, again, I agree with you, 75, which is politics, right? Like, whichever political party is in power, the opposite group cries recession as loud as they can, right? It's a way of hurting the specific party in power's credibility. And it also, I think some of them actually believe it as well, because again, if you watch one-sided news sources, which is basically all of them at this point, they're going to try to make it seem like it's the worst it could ever be right now, right? They're going to try to make it seem like it's the end of the world. It's the worst it could ever be. There's huge problems everywhere. And then the other party gets in power, and then their side acts like it's just the worst it could ever be. There's massive problems in a lot of different areas. It's one of the reasons I just kind of push back and just have nothing to do with that. I don't care about any of that. We're not in a recession. GDP is not losing right now. Unemployment's not necessarily super high right now. And that's just what the market is. Again, I'm not saying I agree with it, disagree with it. That's just the numbers right now. Disney coming back down, man. Disney's weird. Again, the news for Disney is that they're developing plans to accelerate and expand investments in the Disney parks, experience, and products. But they're dipping down. The market's not liking this news. Again, the S&P 500 is kind of weak. I might buy this right now. I'm going to go ahead and buy this. We're down so much. I don't think we're going to continue down, and I might add a little bit more to this too. I just think this is a long enough downtrend to where it's plausible to assume that we might bounce back short term. But maybe I'm wrong. Maybe we keep dipping down, but I'm going to take one contract. We already got a nice cushion on the day here. I think if he hits 200,000 subs, he should give out 200 Bitcoin to his first subs. My first subscriber, bro. I don't know who my first subscriber is. Might have been Carol, for all I know, man. John, what are you doing for us when you hit 200K subs? 200 push-ups? Sure, I'll do 200 push-ups. It's a piece of cake for me over here, dude. Just top 3 greatest push-uppers in the world right now. push-up pushers. Maybe that's what I should say. Um, all right, so we're in this again long right now. We've dipped enough for me to want to buy up a little bit here. We'll take 2 contracts. We got a cushion on the day already. Yeah, again, remember, we might get choppiness today after the opening bell. We're flat over the last 2 days. Like, here's the SPY. And again, you can kind of see we've been sitting here. So like the market's pretty flat. And again, it's FOMC week. A lot of choppiness leading up to it. Once the decision's made tomorrow and they do the press conference, that's when we'll get some big volatility. But for now, it's quiet and boring. There's just no big action here. Traders are more apprehensive to take big positions in size. Again, oil is interesting too. Oil's been up so much the last few days. It's up again today also. All right, well, we're gonna have to start considering cutting the trade if this one keeps going against us. We could add a little bit more to it too. Yeah, if they hike tomorrow, market's going to probably go down. We don't know for sure, right? But if they raise rates tomorrow, it's pretty probable that if they hike rates tomorrow, it's pretty probable the market drops just because it's a shock to the system. It's just unlikely. So if they go outside of expectations, it's pretty probable that the market tanks. Just because so many people are expecting a dovish pause or a skip, that if they shock the system and raise rates unexpectedly, it's probably going to tank the market. But it'll do more damage to inflation long term. So, I mean, that's good. But it'll also mean they're probably not going to raise in November, too. So it just depends on when the Fed wants to raise. They could raise now in September, a historically bad month, or they could raise rates in November, which is November, which is historically a good month. I think they're going to raise rates in one of those cycles. I think it's probably going to be November. I don't think it's going to be tomorrow. It's just super outside of expectations. But nobody knows, and we'll see. Yeah, it's 99% of pause or skip tomorrow. Basically, it's pretty certain we're not going to raise rates. All right, we're still pretty flat. We're down $75 here on 2 contracts, closer to my entry here. And again, we're trying to be patient and wait. It would be unexpected if they raise and market goes up, for sure. But sometimes the market can be contrarian as well. Like a lot of the time, the market will go outside of expectations. You can see that with like CPI. It's not that the market's trying to be contrarian. It's that generally the reaction is baked into the market already. This is different though. If they raise rates, that reaction's not baked in. Like most of the market expects a pause or a skip tomorrow. And so if they shock and raise rates, we're going to get some brash reactions in markets to compensate for it. But again, it's outside of probabilities. It's pretty unlikely, but it could happen. And again, what's going to matter most is what Powell says during the actual conference. So like they're going to announce a pause or a skip, and then they're going to do the interview at 2:30 with Powell where they do a Q&A and all that stuff. What he says in that interview is going to influence the market more than the announcement unless they raise rates. If he shocks people and raises rates, that's going to jolt the market. But as long as they pause or skip like they're expecting them to, what's going to matter more in that, because it's what's expected, is what Powell says during the meeting. All right, so we're consolidating here. We got 2 minutes until the opening bell. I'm not really trying to hold this position into the opening bell, so I'm trying to be patient, but we're probably about to cut this because we're so close to lows and around the open. And I don't want to get stuck in like a big rejection here, so we're not going to hold this through the open. If we bounce up quick here, I'll probably sit in it, but if we break down any more than this, I'm going to cut it and just come back. If we get out now, we're down $25. Now we're break even on the day if we get out now. I don't want to hold it through the open though, but I don't want to get faked out. See, now we're flat on the trade. All right, we got 1 minute. Now we're slightly green on this trade, slightly green. All right. Less than a minute. All right, we got a nice little pop. I should have taken profit there. We got 40 seconds until the opening bell, though. Nice little cushion on the day heading into it. I'm going to get out here. I don't like that. We're still up 100 plus on the day. I just don't like this. It's too much volatility. And the opening bell is in 20 seconds. And so there's just too much risk there for me. We'll wait. Yeah, NVIDIA is really going to influence the market a lot. But here's the opening bell, guys, right now. Exxon and oil correcting back down pretty quick. All right, so there's the opening bell. Choppiness. Disney all the way back up over 84s. Pretty flat right now. Here's a breakdown here. You can see the SPY crack. Put up NVIDIA, see what NVIDIA does. I think NVIDIA Tesla are going to influence this a lot. And NVIDIA is breaking down to 435. So you're watch NVIDIA. NVIDIA is really what's weighing the market down. You can see it retrace, and then the S&P retraces, the SPY retraces, the NASDAQ retraces. Exxon's still pushing up, though. Disney tapped 84.50s. So basically where it was prior to the dip. Retracing back up pretty quick. Watch NVIDIA, though. Again, watch NVIDIA and Tesla. Apple maybe, too. Apple's ripping up. It's dragging the S&P back up. Tesla's ripping up, too. So Apple, Tesla, both pushing up. NVIDIA's going down, though, but Apple's the most heavily weighted stock in the market, so it's kind of what's going to drag the market back up too. All right, SPY pushing. NVIDIA's still looking weak though, but again, the SPY's still following the S&P. The SPY's still following Apple and Tesla, even though NVIDIA's weak. So again, we might get choppiness if NVIDIA breaks down and Apple and Tesla rip up. Again, it could be sideways. If you really think about it, it's kind of getting pulled. The S&P is kind of getting pulled in two different ways. Apple's the heavily weighted stock, and Tesla is pretty heavily weighted as well. But NVIDIA is so influential and heavily weighted also that, like, if NVIDIA breaks down and Apple heads up, it could just cause chop. So far, Tesla pulling back a little bit too. Very choppy open. Not really going to push anything yet. NVIDIA starting to creep back up. Everything else starting to move back up. So I'm going to go long here. It's kind of risky, but I think, like, with a couple of these blue chips starting to move up, I think I could probably capitalize on it if it works out. Just got to be quick. Nvidia just rejected that previous closing price. I don't like that at all. Flat on the day. Tesla's still pretty strong. What's Apple doing? Yeah, I'm going to cut this. I don't like Nvidia here, Apple, Tesla. Nvidia, Apple are both breaking down, which is going to mean more bearish trends in price action. We're still green on the day, but I got to just be smart. Tesla broke highs up to 267s. Again, pretty flat and everything else. Nvidia sideways, Apple sideways. Tesla strong though. All right, so there's a big rip up, big bull trend. Or big, not bull trend, big bull candle, I mean. Again, very flat though. Apple's holding the previous closing price and bouncing. Tesla's still on an increase too, and so there's a move up. And again, if you haven't already, check out Chart Prime. I'm loving using Chart Prime in my trades lately. Again, here is the S&P 500, basically the E-mini. And I've slowly been growing more accustomed to using the Market Oracle Pro. It gives these buy sell alerts, these strong signals. Look at what it says. Look at the accuracy rate of when it says strong. All right. So just look at this chart for a second. Again, it's $40 a month. You can use it in stocks, crypto, Forex, and futures. But like, look, let me show you this. Just pay attention for a second. Look at when it says strong and look at the accuracy. Strong green here. Nice bounce. Strong red here. Way back here. Nice drop. The next strong one is right here. Nice drop. And this is a 5-minute chart. So this is like an hour of red action. Again, looks for the next strong. The next strong is right here. Big breakdown drops afterwards. So it's literally 4 for 4 in strong. So very powerful. And again, you can set trading view alerts. So I can set an alert that I want it to give me alerts on a strong sell signal. The other ones are pretty accurate as well, the buy or sells, but like pretty useful, guys, pretty useful. There's so much that they use as well. Like, look, I can put up chart patterns and see these rising wedges. And then look, when it breaks the wedge, it actually holds. There's so much stuff that they offer. There's regular market oracles. I can put up smart money concepts, different oscillators, market dynamics, reversal signals. There's just so many different things, candlestick patterns. There's so many different things that you can use here that work. And it's just very useful. Again, they're a sponsor of mine. I'm biased in their favor, but like I can't fake what I just showed you. And I think that's genuinely cool. And again, for $40 a month, it's pretty cheap too. So if you want to check it out, you can use that promo code. I'll also put the link up in the description as well as in the chat. Again, they are a sponsor of mine. I'm definitely biased because they pay me money, but again, I can't fake what I'm showing you. And you can use an hourly time frame, a daily time frame for longer term trades if you want. A lot of people use them in crypto also. So yeah, check them out. Flat open though, very flat market open, guys. Not really much going down. Yeah, I'm gonna start setting these alerts on the strong signals. Yeah, I'm going to go long here because I see the market trying to break the top. There we go. All right, we're up a little bit here. Let's see if we can rise some more. Nice. Up 50. pumping. You're going to lock that in, take the profit there. See if we can find a little dip to buy afterwards. We're watching NVIDIA pretty close, but Tesla very strong open. Apple very green on the day now too. Apple up to 170s or almost 180s. Kings, that's not true. They don't repaint Kings, and so again, if you look at this, bro, again looking at the strong signals, it's a 5-minute chart, brother. This is not a 1-minute chart. And so again, let me get rid of the chart patterns here so we can actually see this. But like, look, it might show you the candlestick later, but that doesn't mean anything because when you zoom in here, bro, like, look. Okay, so imagine the strong sell signal came here, right? Which means that it gave the alert here. Big breakdowns. Like, look, this is like what? 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60 minutes later, brother. This is a 5-minute chart. It's not a 1-minute chart. Again, same thing here, right? So it gave the signal here. That means here it gave the buy signal. Or that means here the signal showed up, right? So again, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65, 70. Over an hour of green action afterwards. And so again, that's just not accurate. That's not true. Again, market's still ripping up some. Testing the top of the range, breaking the top of this range. Yeah, it's on the next candle is what it is, B. King. It's on the next candle, brother. Like, look. So as an example, let's see what alert I had shown here. I think I had the market oracle. Yeah, so it's on the next candle is what it is. So again, just to show you, right? Here's the reversal signal. You can see the alert for Tesla right here that just showed up at 8:40, right? And so it came on the very next candle afterwards. So it's candle related. So if it's a 5-minute candle, it comes 5 minutes after the reversal signal would show up. Yeah, I mean, Kings, no offense, man. It just seems like you might just be arguing just to argue, but it's all good, bro. Hey, nice Tsla. Congrats. Yeah, I mean, again, Kings, it's all good, bro. Regardless, they're a sponsor of mine, and so yeah, unless we're not going to argue anymore. What you're arguing is very subjective on whether it's useful or not, and so it just, you know, again, it's all good, but I'd rather just not argue about it, brother. It's called the Market Oracle Pro, Matthew. How much profit could you have with a budget of $1,000? There's no way for me to answer that. I can't guarantee you're going to profit or make money from anything. Nobody can. It depends on the trader. Tesla holding at the VWAP, though. It's at 266. What's up, John? Fed seems like it'll pause this time, markets. Yeah, it's almost certainly going to pause. Like, we're almost certainly going to pause. Again, the market's pretty choppy today, though. It's pretty flat. Like, we're moving up a little bit. Shout out to, where'd he go? You know, I always tell people not to pressure people to do one specific thing. So don't tell people not to buy. Don't tell people not to sell. Let me find this. This is why, right here. All right, just to put this in perspective, Randy said that here. You know, shout out to Randy. Yeah, I got you, Tristan. Here you go, bro. Link's in the description, so just check it out in the description. Yeah, I mean, it's the day ahead of the FOMC, and so the market's going to be slower. Right, for sure, Bo. 100%, dude. Let's pause and wait for him to say, see, he told me he was right. 20 minutes later, we dip, you know? Um, but again, Tesla's starting to fall. We'll see if Tesla holds the previous closing price. I mean, there's not saying the trend is down. I'm not even going to say it's wrong. It's just incomplete, brother. Like, you know how many different trends are on the chart right now? We could look at a 1 minute trend, a 5 minute trend, a 20-minute trend, an hourly trend. You know what I mean? A daily trend, a weekly trend, you know, like there's so many different trends. So just saying the trend doesn't really mean anything yet, brother. It doesn't really mean anything yet. Like I said, you got to be specific, dude. You can say the 5 minute trend is down, or the daily trend is down, or the hourly trend is down, right? Because if you just say the trend, that could be anything. Patrick with the great comment of the day, bro. We ain't mad, Randy. We're disappointed, okay? No, it's all good, bro. I'm just trolling you a little bit, Randy. Again, regardless of whether you're right or wrong about this individual one, there's a rule here, which is that don't pressure people to go one direction. Don't pressure people to buy. Don't pressure people to sell. Just, you know, because again, in my bias here, and look, here goes the market moving up. Again, my bias here is like, I've seen so many people say, don't buy, sell now, don't buy, sell now, market's going down. And then the market rips up 5% that day. And I've seen people do the same thing, saying, buy now, don't short, buy now. And then the market drops 5% that day. And so it's just not helpful. It's just not helpful. All right, there's the market. Rip it up. I mean, speaking of that, Randy, you know, and again, if you do pressure people to go one specific direction, you better be prepared for me to troll, to never-endingly troll you for it. And that's okay. It's all love. Like I said, we're friends here. Like, I can troll you guys if I want. Yeah. I mean, and if y'all were me, y'all would too, you know. Well, 1 minute trend matters if you're scalping. It just depends on the type of trading. There's all different types of traders. Like there's scalpers, there's trend traders, there are momentum traders, there are extension traders. Like every time frame matters and every trend matters depending on what the trader's doing or who the trader is or what they're using. Again, we could all say we could all say our way is best and everybody else is wrong, but that usually shows a lack of experience in markets, right? Somebody that's experienced in markets is going to say, hey, a lot of people can make a lot of money in a lot of different ways that I don't. And that doesn't necessarily mean they're wrong just because they trade, you know, opposite or opposing to what I trade, even if we're both profitable. So I guess the point is, you know, there's all different types of trends and time frames. None of them are wrong, you know. Yeah, I mean, but that's what I'm doing, Kings, is I'm trading shares and futures with pretty large capital. Again, my Thinkorswim account has about 200,000 in capital, you know. Let me rephrase. It has about 200K in buying power, which isn't really super large. You know, it's got about 60 liquid in it. Futures is a $50,000 funded account, so I mean, it's not small either necessarily. It's a friendly channel. I've maybe tried a couple other live trading channels during the day while John is concurring the real estate world. They are not as friendly. Yeah. I mean, we try. Nude traders. Hey, that's an idea, bro. Listen. Hit it. Apple holding at the volume weighted average price. So look at Apple here on the right side. Again, Apple bouncing, pulling up over the VWAP, holding, bouncing directly off of it. I think you have to go to our trader to see your true P&L. What I usually get to see pretty close to that, Kane, is I go to my account balance. All right, so if you go to your account balance, so if you go to, wait, let me pull up Quant Tower. The way I always generally do it is I go to, if you look at the top left, at the scroll bar on the top left, you'll see ACC. It stands for account info. You can look to see what your balance is in that specific account. So like if it's a 50K combine, you can kind of see what your account balance is there and so forth, right? That's how when I'm seeing whether I'm funded or not, that's the number I look at, is what the number is there. If that number says I'm over 53 on the 50K combine, that means I hit 3K in profit and I should be funded. That's what I look at, although I can't guarantee it's necessarily accurate. All right, guys, I'm probably going to close it down for the day. The market's pretty chopped. Like this price action sucks. Let's just be honest here for a second. This price action sucks. Right? That's nothing. That's boring. No edge, no consistency. Maybe we'll break out and do something, but I'm going to go ahead and close it down. If you want to check out Top Step, great way to learn how to day trade futures. The futures market has no PDT rule. It's where most pro day traders trade because there's better liquidity. There's no PDT restrictions. You can day trade short. You can see I could buy market, buy bid, sell the ask. This is the S&P 500 futures contract. I can also trade the NASDAQ, gold, silver. Patterns are very similar to large caps, but no PDT. And again, they give you a demo. They test your skill. Just taking the challenge builds you into a better trader, and it's $49 a month. And if you're good enough to pass it, they'll fund you between 50 to 150K with a 90% split. And they pay out millions every year and fund thousands of traders a year. They pay out millions in actual withdrawals every year. So it's a great way to learn with limited risk. You're still risking something, of course, but it's generally less than you would putting up the money yourself. And so if you want to check it out, here's the link. Great way to help support the channel. I mean, I don't think anybody's right. I think the market right now is pretty flat. Again, Randy called that, and again, I'm just trolling Randy, by the way. Randy called that down here. And so technically Randy would be neutral right now, relative to where he made the call out. But of course, like bears are going to say he's right. Bulls are going to say he's wrong. And again, I don't know whether he's right or wrong. I was talking about for me as a scalper where I tried to enter right here. And then we ended up ripping up pretty big afterwards, right? So in terms of my scalping day trade, Randy was definitely wrong because we ended up breaking the highs and going all the way up there. But I digress. It's all love, Randy. I hope we go down for you, sir. Good luck. I'll see you guys tomorrow. Y'all be safe. Have a good day. Remember, the FOMC rate hike decision is tomorrow. Be safe. Good luck. I'll see you guys.